Good afternoon, everyone, and thank you very much for joining me. This is the NFP live trade, 7th of October, and it's just gone 20 past 12 GMT, 20 past 1 UK, and 20 past 2 ZA. My name is Russell Shrum, Senior Market Specialist at FXCM. Just going to bring up the high-risk investment warning. I'll keep this on screen for a few moments. Just want to confirm, can you guys hear and see the screen? Can you hear me and see the screen? There has been times when I have not really turned the sound up or the screen on. Just want to double check that we can see and hear. Okay, cool. Thank you very much. Excellent. All right, let's just bring up our market commentaries disclaimer. Just going to change this to the NFP layout. All right. Here is the references. So we'll use market scope to trade. We'll look at Forex Factory just to get the data. And Trading View, I may look at the US dollar here. I usually don't, but I may. It's set to 30 minutes. The reason that I'm looking at the US dollar on Trading View is because we are using a live account, and as a FXCM employee, I actually don't have access to the US dollar. It's a FXCM instrument. And then just underneath this, I've added the 2-year yield, which should be quite sensitive to the non-farm payroll. All right, just going through to Forex Factory. What we're looking for, don't mistake the Canadian data for the US. We're looking at the US data, and we want to see the non-farm employment change. There's ranges, I'd say between 240 to 50,000. We'll see what they come in. There's no doubt that it's slowing. So if I bring up the histogram, the skyline's actually coming down, and you can actually see the forecasts are coming down. It's just something to note. We'll see if it sort of surprises to the upward, to the downside. Unemployment rate, I think, is less important. Average hourly earnings will be important if it's a upside surprise. So I think non-farm employment change. This is actually, I think, where the focus is for the moment. We're not going to put on a trade before the data comes out, which is in just under 3 minutes. What we'll do is we'll put on a trade after. I just want to run through this with you guys. We're going to wait for the first move, which we call the impulse. Either it's going to shoot to the upside. We're going to be trading euro, US dollar. So if it's shooting to the upside, there's a bid for euro. US dollars will be being sold. If it shoots to the downside, then the US dollar will be appreciating against the euro. We're going to wait for a pullback. Okay, once we get the pullback, we're going to try and get in, and I'll explain to you step by step as we go what I'm looking at. Just in terms of our targets, we'll just put in, we want a stop loss 20 or less. Okay, in other words, we're going to trail the stop loss, take profit 20. So that's how we're going to be measuring our success. Just taking a look at the chart that we'll be using. It's going to be on the 1 minute. So we'll be tracking it on the 1 minute chart. I do have a 15-minute here, which I may look at occasionally, and the hourly, which again, for the hourly, it's really the pivots, I think, that become important. We'll spend most of the time on the 1 minute chart. When we get that pullback, we're going to look for what's called a reference candle. I'm going to show you exactly what we mean by a reference candle. And then we're going to take the entry once we get the reference candle. Once we in, okay, it's all about stop loss management. Okay, so we'll start working with the stop loss then. If you take a look in the top left corner, we've got 43 seconds, 41 seconds, 40 seconds. After that, we're going to get the non-farm payroll. So with that all said, let's bring it up. And we can just keep our eye on the data that comes through. Okay, 12 seconds. Let's see, there should be a spike coming soon. 5 seconds. Wow, okay. So euro is getting sold down heavily at the moment. So data that's come through that's very positive for the US dollar. So that's the first thing to note. You can see in the 15 minutes it's emphasized to the downside, isn't it? The hourly, we're moving towards this S1 pivot. All right, let's see if we can get some figures. All right, Rob says 263 coming in, so more job created than forecast. 263. Average hourly earnings at 0.3. Unemployment rate actually tighter. Okay, so let's just interpret this, and then we'll go back to the chart. We know that the Fed is very much looking to get inflation under control. They're battling with that. The fact that there's still such a tight labor market, on the one hand, means that they have the cushion to carry on with their hiking. Secondly, they are of the view that the job market is disconnected with the actual underlying fundamentals, and they're going to see this as probably being frothy. So I think it is dollar positive. Let's go back to our chart. And let's start tracking now for a pullback to see if we can take advantage. Now remember, we're looking for what's called a reference candle, and I shall explain that as we as the candles build. Right, I'm a supporter of the stochastic, a fan of the stochastic. I think it's a good indication of momentum. Okay, and if we get to this lower quintile, the downside momentum certainly would be present. All right. So this is our reference candles. What we're looking for is looking for the highest high in at least 3 candles, which we don't have yet. So we're watching that carefully. Once we get that, we're going to need at least 1 more candle, and we want it to close below that reference candle's low. So that's the entry criteria that we're looking at now. Okay, got another 23 seconds on this candle. We haven't entered just yet. We're just trying to bide our time here. And what the reference candle is really designed to do is get in at the apex of a pullback, and we'll see if we get some success. want to see if this, see, now we've got another higher. So what the reference candle's naturally going to do for us is going to shift our entry upwards. Another 30 seconds on this candle. Okay, the stochastic is heading towards that 20 area, so I'm still of the opinion short is probably the trade I'm going to take. Okay, now we've got a potential reference here, assuming that this doesn't make a new high. Now we're waiting for this reference candle's low to be breached for a close below it. Okay, we got another 28 seconds there. All right, so there's the breach. Now the question is, are we going to close below it? 17 seconds. Okay, 4 seconds. We'll probably put on a short here with 20. All right, so we're in short here. This is the stop loss. It's 20 pips away. So we want to get this down as quickly as possible. And I'll take profits 20 pips over here. So you can see here was the highest high, and here was the confirmation. All right, let's get rid of this. Okay, so now it's all about stop loss management. We want to try and get the stop down as quickly as possible, because if we get stopped out, ideally you would want to get stopped out for less than 20 pips, right? But we want to do it methodically. I think if we can take out this, we can take out this over here, we can start moving it down. So we're six pips in. And we've got 30 seconds. Okay, 5 seconds. Let's close, add a new. Okay, I think we can start bringing this down to just above resistance there. Okay. So we've pulled a lot of risk out. So we started off at 20, we're now at 14.5. So we've pulled five and a half pips of risk out. All right, we're 14. I think we've got to start capturing some gains here. So let's be really aggressive. I'm going to pop this right there. Another 16 seconds. All right. That's it. Probably needed to give it a little bit more room. Maybe bring it back instead of that candle. Maybe could have put it back on this candle over here. We've got the 5.8 in. What we can do, just by the way, which we haven't looked at previously, we've got a stochastic that is nicely under the 20 area. As long as it stays under that 20 area, I think the momentum is biased to the downside. What we'll do is we'll just spend the next few moments seeing if we can get another entry in here on a reference candle reversal, see if that's possible. And if the stochastic moves out of the 20, we'll cancel that. Okay, we've got 30 seconds here. Let's just see if this is a going to be a reference candle. It's got to close below the reference candle's low, right? The 5 seconds there. All right, I think we'll put it on this same parameters, 2020. Just keep an eye on that stochastic. We need some downside pressure here, so let's just put this horizontal in as a measure. Okay, in 9 seconds, we'll get the next candle. I'm still watching. If I go silent, I'm just watching the price action here. It's starting to move sideways, and more using this down momentum. If this stochastic moves out of 20, it's not ideal. There's a little bit of bearish momentum coming in. Keep an eye on that stochastic. It's staying under 20, which is what we want. Another 5 seconds, we'll get the next candlestick. All right, I want to start getting the stop loss down again, so we'll use this as a yardstick. Indran's doing a mirror trade on the Nasdaq 100. He's 33 points in profit, which is good to hear. Just want a little bit more confirmation that we've broken this this line here. Okay, and the stochastics cooperating quite nicely. All right, I think we need to start protecting this. Okay, I think pretty close to being stopped here. 16 seconds. Okay, so we've got 11 on this one, 5 on the first one. So we won't put on a third, but here was the first trade. This over here. Let's just clear this up. Okay, so this was the first one, and this was the second one. Right, so I think that's where we shall conclude. Are there any questions? Please go ahead and type those in. Sam's asking, did I wait for the stochastic to drop before entering the first? No, the stochastic is not. It's not a primary factor in what I look at here. Really, first of all, Sam, it's a very small position. So it's just to be. It's a live trade on a live account, but I'm trying to catch the pullbacks, right? So the fact that I saw the momentum after the fact, I thought, well, it's probably worth seeing if there's more to be had here. Any other questions? By the way, the stochastics remaining under 20, so you can see that even though we were stopped out, I think that ultimately that take profit most likely gets hit. Any other questions? All right, I think okay. Cool, Rob. Have a good trade there. Thank you very much for joining, guys. Please join me again next month. I was thinking about turning on the camera for this one, but I'm actually wearing a t-shirt, which I thought's a little bit unprofessional. So next month I'll make sure I've got a collar on. See you guys then. Thanks very much. Cheers.